In early December 2025, Russia announced something that sent shockwaves through European financial markets and triggered emergency meetings across Brussels, Berlin, Paris, and London. The Russian government declared it would seize approximately 180 billion in European assets located in Russia and Russian-controlled territories in direct retaliation for the $300 billion in Russian assets that Western countries froze in 2022. This isn't a threat. This isn't posturing. This is Russia executing the largest state asset seizure since World War II, and European governments are warning privately that this could trigger systemic market failure across European financial systems. Let me be absolutely clear about what's happening right now in late December 2025. Russia is not just seizing random assets. They're targeting specific European holdings with surgical precision designed to cause maximum economic and political pain. Major European companies operating in Russia, energy firms, manufacturing plants, retail chains, financial institutions, all facing immediate seizure. European government bonds held by Russian institutions being confiscated. European real estate owned by European entities in Russia being appropriated. The total value Russia claims it will seize is 180 billion, carefully calculated to inflict damage while being substantially less than the $300 billion Europeans froze, giving Russia moral high ground in the propaganda war. And here's what makes this absolutely catastrophic for Europe. This isn't just about the 180 billion in direct losses, though that's enormous. This is about the precedent and the cascading effects. If Russia can seize 180 billion in European assets without facing consequences beyond what Europe already imposed, what stops China from doing the same? What stops any country with European assets from using seizure as retaliation tool? European officials throughout December 2025 have been warning privately that Russia's counterstrike could unravel the entire post-World War II assumption that foreign assets in sovereign territory are protected by international law and norms. The warnings about systemic market failure aren't hyperbole. They're based on cold assessment of what happens when $180 billion in European corporate and government assets suddenly disappear from balance sheets. Banks that lent against those assets face losses. Insurance companies that covered those investments face claims. Pension funds that invested in affected companies see portfolios crater. Stock markets where these companies trade face selling pressure as investors reassess risk. Bond markets for affected governments face yield spikes as creditworthiness is questioned. And this is all happening right now in the final weeks of December 2025 as Russia begins implementing the seizures and as European markets start to price in the implications. Let me show you exactly what Russia announced in early December 2025 because the specifics reveal the strategic calculation. Russia published a list of approximately 400 European companies and institutions whose Russian assets will be seized. This list includes some of the largest European corporations, major German manufacturers with Russian factories, French energy companies with Russian operations, Italian banks with Russian subsidiaries, British retail chains with Russian stores. The total estimated value of assets Russia claims it will seize is 180 billion based on book values from company financial statements. Some analysts suggest actual recovery value could be lower, perhaps 120, 150 billion, but even at the lower end, this represents the largest state asset seizure in modern peacetime history. Russia justified this action as direct retaliation for the $300 billion in Russian central bank reserves and private assets that Western countries froze in February 2022 after Ukraine invasion. Russian officials throughout December 2025 have been explicitly stating that this is reciprocal measure. You froze $300 billion of ours. We're taking $180 billion of yours. We're actually being more restrained than you were. And Russia structured the seizures to maximize European political divisions. German companies are hit hardest with an estimated $60–70 billion in seized assets. This creates enormous pressure on German government from business community. French companies face roughly $30 to $35 billion in seizures. Italian companies $20 to $25 billion. Each major European country has domestic constituencies screaming at their governments about losses. This is strategic brilliance from Russian perspective. Create internal European political pressure while establishing precedent for asset seizures that other countries, particularly China, are watching closely. Now look at what specific European companies are being hit, because the details reveal the economic impact. Volkswagen, BMW, and Mercedes-Benz all operated manufacturing facilities in Russia that were suspended but not fully divested after 2022 invasion. Russia in December 2025 announced seizure of these facilities. Combined value is estimated at $8 to $10 billion. Throughout December 2025, German automakers have seen stock prices fall as markets price in these losses. But worse than direct losses is the precedent. If Russia can seize German auto plants, what stops China from seizing German operations there if tensions escalate? German auto industry depends massively on Chinese market. This precedent threatens German industrial model. Total Energies, the French energy giant, had significant investments in Russian oil and gas projects. Russia in December 2025 announced seizure of these assets, estimated value $4 to $5 billion. French government throughout December has been trying to negotiate exceptions, but Russia has been inflexible. UniCredit and Intesa Sanpaolo, major Italian banks, operated Russian subsidiaries. Russia announced seizure of these banking operations in December 2025, estimated value $3 to $4 billion. Italian banks throughout December have been scrambling to assess exposure and contain damage. Dozens of other companies across Europe face similar seizures: retail chains, manufacturing plants, service companies, financial institutions, oil and gas operations, real estate holdings. The breadth of seizures creates widespread pain across European business community. And beyond corporate assets, Russia is seizing European government bonds held by Russian institutions. Estimates suggest $10 to $15 billion in European sovereign debt held by Russian banks and central bank will be confiscated. This is relatively small, but symbolically important. Governments themselves are victims, not just corporations. Let me tell you what European governments have been saying privately throughout December 2025, because the panic is real, even if public statements remain calm. According to reports from multiple sources, European finance ministers held emergency video conference in mid-December 2025 to discuss Russian counterstrike. During this call, multiple officials reportedly warned that this could trigger systemic market failure if the full implications aren't contained. The concern isn't just the $180 billion direct loss. It's the loss of confidence in international investment safety. It's the precedent for other countries. It's the potential for contagion as banks and institutions reassess all foreign exposure. German officials reportedly warned that German business community is furious and demanding government response. But what response is possible? Germany can't refreeze Russian assets. They're already frozen. Can't impose more sanctions. Comprehensive sanctions already in place. Can't use military force over asset seizure. Germany is essentially powerless to prevent the seizures. French officials reportedly raised concerns about precedent for Chinese actions. If Russia can seize European assets, China could do the same. French companies have hundreds of billions in Chinese operations. If China followed Russian precedent during Taiwan crisis or other confrontation, French economy would be devastated. Italian and Spanish officials reportedly expressed concerns about bond market reactions. If major companies from Italy and Spain face losses, and if European bonds held by Russia are seized, will bond markets punish these countries with higher yields? Both countries have high debt levels and can't afford yield spikes. The overall tone of the December 2025 emergency meeting was reportedly near panic, as officials recognize they have no good options to prevent Russian seizures or contain consequences. Now, look at what's happened to European markets in December 2025 following the Russian announcement, because market reaction reveals how investors are pricing this. European stock indices fell sharply in days immediately after Russian announcement. German DAX fell roughly 5 to 7%. French CAC 40 fell 4 to 6%. Italian FTSE MIB fell 6 to 8%. These are significant single-event declines reflecting immediate reassessment of European corporate value. Individual company stocks were hit even harder. German automakers fell 10 to 15% as markets priced in plant seizures plus broader concern about asset safety globally. European energy companies with Russian exposure fell similar amounts. Banks with Russian operations fell 8 to 12%. By late December 2025, European stock markets have partially recovered from initial shock, but remain down 3 to 5% from pre-announcement levels. This represents hundreds of billions in market capitalization destroyed by Russian counterstrike. European bond markets showed stress throughout December 2025. Italian and Spanish government bond yields rose 0.2 to 0.3% as markets questioned fiscal implications of corporate losses and potential need for government support. These yield increases add billions to annual borrowing costs. Euro currency weakened throughout December 2025, falling roughly 2 to 3% against dollar as currency markets priced in European economic damage from Russian counterstrike. The overall market message in December 2025 is clear. Russia's asset counterstrike is causing real economic damage to Europe beyond the $180 billion direct losses. Let me show you what Russia is doing with the seized assets, because this reveals the strategic endgame. Russia isn't just taking European assets and leaving them idle. Russia announced in December 2025 that seized assets will be sold to Russian companies or individuals at substantial discounts, effectively transferring wealth from European corporations to Russian ownership. A European manufacturing plant seized by Russia might be sold to Russian oligarch for 30–40% of book value. Russia gets cash to fund war effort. Russian oligarch gets valuable asset at discount. European company loses everything. This isn't just retaliation. This is wealth transfer from Europe to Russia, using asset seizures as mechanism, and it's entirely consistent with how Russia has operated throughout Ukraine war, using economic warfare alongside military operations. Russian government has also announced that portion of seized asset proceeds will go toward reconstructing Russian-controlled territories in Ukraine. This creates narrative that European frozen assets are funding Ukraine while Russian seized assets fund reconstruction, positioning Russia as acting defensively. Now, look at what this means for future international investment, because the precedent is what matters long term. For decades, international business operated on assumption that while political risk existed, outright asset seizure by developed countries was rare and limited to extreme circumstances like war or revolution. Russia's seizure in December 2025 of $180 billion in European assets during ongoing conflict, but without formal war declaration, challenges this assumption. If Russia can seize assets during conflict they started, what prevents any country from doing so? China watching this precedent closely. If U.S.-China tensions escalate over Taiwan, could China seize hundreds of billions in American and European assets? After December 2025, the answer is clearly yes. There's precedent and apparent lack of effective countermeasures. Every multinational corporation throughout December 2025 has been reassessing foreign asset exposure. Risk managers are updating models to account for seizure risk that previously was considered negligible. Insurance companies are repricing political risk coverage. Investors are demanding higher returns to compensate for increased risk. The long-term effect will be reduced international investment as companies conclude that foreign assets are less safe than previously believed. This represents reversal of decades of globalization driven by assumption that property rights would be respected internationally. Let me tell you what I personally think is happening here beyond the immediate seizures. I believe Russia calculated in late 2024 or early 2025 that the frozen $300 billion was never coming back, regardless of war outcome. Once Europe froze the assets, there was no scenario where Russia regained access peacefully. So Russian leadership decided to execute counter-seizure for multiple reasons: recover partial value through European asset taking, create European political divisions by hitting businesses hard, establish precedent for asset warfare that benefits Russia and allies like China in long run, and demonstrate to Russian domestic audience that Russia can strike back effectively at Western economic warfare. The December 2025 timing is strategic. As year ends, European companies must account for losses in financial statements. As 2026 begins, businesses will be lobbying European governments intensively for relief or compensation. European political cohesion on Ukraine will face enormous strain as businesses demand policy changes to recover assets or receive compensation. I believe we're watching evolution of economic warfare where asset freezes and seizures become standard tools of geopolitical competition. December 2025 will be remembered as the moment when post-Cold War assumptions about international investment safety died. Subscribe to this channel if you want continued coverage as this crisis unfolds into 2026, because mainstream European media throughout December 2025 has been downplaying severity to avoid panic while markets and businesses face reality of losses. Now look at what European response options are, because this reveals the powerlessness. Europe could seize additional Russian assets, but $300 billion is already frozen with limited additional targets available. Europe could impose more sanctions, but comprehensive sanctions already in place with little room to escalate further. Europe could provide government compensation to affected companies, but this would cost $180 billion that European governments don't have. Plus, it would create moral hazard, encouraging future risky foreign investment. Europe could negotiate with Russia for asset return, but this would require unfreezing Russian assets or making other concessions Russia would demand, which is politically impossible while Ukraine war continues. The brutal reality throughout December 2025 is that Europe has no good response options. Russia has executed Counterstrike, Europe will absorb losses, and precedent will be established for future asset warfare globally. Now let me show you what 2026 could look like as this crisis develops. European companies will finalize losses in financial statements in Q1 2026, triggering more market volatility as exact damages become clear. European governments will face intense lobbying in early 2026 from businesses demanding compensation or policy changes. European political unity on Ukraine could fracture in 2026 as businesses and populations question whether supporting Ukraine is worth losing $180 billion, plus facing precedent that endangers all foreign investments. China could execute similar seizures in 2026 if Taiwan tensions escalate, using Russian precedent as justification. This would hit American and European companies with hundreds of billions in Chinese assets. Other countries could adopt asset seizure as tool in 2026, recognizing that international community has no effective enforcement mechanism to prevent it. The global investment environment in 2026 will be fundamentally changed from December 2025, with higher risk premiums, reduced foreign investment, and reversal of globalization trends as companies minimize seizure exposure. Based on December 2025 Russian Counterstrike, 2026 could be year when international economic order based on property rights and investment protection effectively ends, replaced by system where assets in foreign territories are hostage to geopolitical competition. Now look at what troubles me most as December 2025 ends. Russia executed largest peacetime asset seizure in modern history, $180 billion from European companies and governments. European warnings about systemic market failure are based on real risk of cascading losses through financial system. Yet European response has been essentially paralyzed. No effective countermeasures, no way to prevent seizures, no plan to compensate losses. Just absorption of damage and hope that markets don't panic. This reveals fundamental weakness of Western economic warfare strategy. Freezing Russian assets in 2022 was supposed to pressure Russia into changing behavior. Instead, Russia adapted to frozen assets and 3 years later struck back with seizures that hurt Europe while establishing precedent that benefits Russia and allies. Western policymakers assumed economic dominance meant Russia couldn't effectively retaliate. December 2025 proved this assumption wrong. Russia can hurt Europe economically through asset seizure even while Russia is weaker overall economically. Russia launches $180 billion asset Counterstrike in December 2025. Europe warns of systemic market failure as losses ripple through financial system, and precedent is established for asset warfare that fundamentally changes international investment for decades to come. That's December 2025, the month Russia struck back after 3 years of frozen assets, the month European companies lost $180 billion, the month markets fell on realization that international investment is far riskier than previously believed. The month global economic order based on property protection began unraveling. Subscribe for continued coverage as this crisis develops into 2026. Because based on what happened in December 2025, next year will likely see Chinese and other countries following Russian precedent, potentially seizing hundreds of billions more in Western assets and completing the transformation from globalized economy based on rules to fragmented system based on power. The counterstrike is real. The market failure warnings are justified. And December 2025 will be remembered as the month when economic warfare escalated beyond Western ability to control or counter effectively.